Welcome. So this is going to be a breakdown for Bitcoin. I'm going to be going over a potential buy setup that I'm seeing right here at 39,000, or excuse me, right at the 50% retracement, right here at 38,000, all the way up to the 13 extension level of 46,000. Specifically, I saw this first bullish impulse here, then a retracement back down, followed by another bullish impulse, this second rally. These blue arrows here are representing the bullish impulses that I see. And then we had a retracement here. Now, in this last retracement, let's see if I can do this. Boom. In this last retracement, we can see that prices came down here into this pocket area, specifically where I like to see where prices came is it came 50 to 6.8%. It retraced from this low to this high. Prices now retraced now into this pocket. So I'm gonna, for visual purposes, draw a blue box here between the 50% and the 6.8, and this is gonna represent our buy zone that we're trying to see price hold. We want to see price hold in this zone and continue to rally up higher. Continue up into our breakout zone of the 236 right there. So I'm going to implement that black arrow. Now I have steps, so let's go over these steps and go over the confirmations on pretty much what price has given us. So the best time frame, in my opinion, to visually see this is going to be the 12 hours. So I'm going to leave this right here. I'm going to leave this like that. And we're going to log the price to loss ratio. Boom. So price stays like this. Okay, cool. So the first thing we're going to do is our step one, is identify the impulse. We have identified this bullish impulse starting from the low to the high, and this is going to be our step one. This is us identifying the impulse of step one. Put this on so I don't have to do that multiple times. And then we are going to go to step two, the break of the EMA. The EMA that I see break is, for this visual purposes, we're looking at the aqua. So this aqua EMA here, specifically on this candle, is where price broke the EMA. So I'm going to make that as my step two. And then the next step three, price reaches at least one of the fib levels. So price reached this 30, 50, 60%. Price reached all the way down to 60% before we can see our first bullish candle begin to break back up above. Now we can give an opinion to say it reacted before then, but we'll just mark our 3B here. And now 3C, we're looking for a shift. The shift is identified by a breakup structure. If price makes this bullish impulse here, it made a lower high. It made a high right here. I now need price to come back to break that high here or close above that high. So we're going to mark this candle here as our 3C for visual purposes and examples. And then if you paid attention here, you see that price reached the 786 and 886. That is a whole nother zone that is considered a fib zone. So we're going to mark that as our 3B, because that zone is just as important to visually see that it was reached. Every time price reaches a fib level, that is a potential entry level. So we must mark those as they go along. So we have our 3B, we have our 3C here. Price broke the EMA. It may be tight to see here. There's a lot. I already locked it, so I can't zoom in really, but we'll continue forward. The cross of the EMA, not there. Let me redo it. The cross of the EMA is actually here. Now, the one that I marked is actually going to be our 4C, because that's our second one. But if you look at the wick rejection of that candle right here, this candle right here, it didn't close above, but it breached the EMA. When it made contact, that is a confirmation for step four. There's contact. The breaking has been broke. It may not have been confirmed the break, but it has at least reached that level. So that is step four. When price came back and tested this low, tested that 618 one last time, that is going to be our 4B. Price rallied up. Step five. Price crossed back down the EMA here. Step six. Is it reversing in the zone? Yes, it is reversing in the zone. 6B. The specific zone I'm looking at is now, if you look from here, that low to this high, on the closure of the candle is where I have the black Fibonacci. This is our second fib. Looking for the retracement right here in this specific 618 to 50%. We've had 2 bullish candle closures, now breaking the previous closures of those. So we now need to see this shift. This is our last highest bullish candle. We need to see a closure back above here to be for our 6C. So I'm going to write 6C question mark because it's not done. And then as well, we still need to wait for the break of the EMA. So there's a lot more confirmations that are going to continue to come, but there must be patience. I'm going to actually go to the 4-hour time frame, unlock our price to par ratio, and see that when we come to a lower time frame, the EMAs and the structure looks different. It's a lot more wide. So I like to make it as compact as possible, but still getting an overall visual picture as well. If we look at the red cloud, this first grayish black line is a 100 EMA, and there's one above it that says 200 EMA. So this red cloud is a visual representation of the resistance between the 100 to 200% zone. So when the price made this bearish retracement, it fell, and then retraced back up into the red cloud, is retracing into the resistance, and then look what price did. When it came into the red cloud, the sellers gained strength, massive bearish impulse. Sellers came up again. After the buyers pushed it, price closed one candle, 1, 2, 3 hours, reversed back down. So now price is loading in these areas where price is previously resistance. Resistance is now coming into support. So we now want to see these zones and these levels hold. This specific zone and level we're at right now, we want to mark it up as this is our 618 here. So that's going to be in our entry level. Right here. And then our first target level is up here, of course. We want to enter between, I'm trying to enter between 38,000 and 37,000. But this should be a good visual representation of my example of my video. But yeah.